You're now tuned in to another episode of Juicy Gems, your go-to podcast for everything related to the world of stocks. Discover new trade ideas, current stock market trends, and option trading tips, exclusive interviews with other successful traders, and so much more. Let's go! Welcome to Juicy Gems. Now with your host, Xavier the Master Trader.
What's going on, everybody, and welcome back to another episode of Juicy Gems. I'm your host, Xavier, also known as the Master Trader. I'm a 10-year trading veteran, former financial advisor with 8 back-to-back green years. Now, today, I'm going to be uploading a Twitter space that I did. Now, if you guys follow me on Twitter, you can find me with my handle is @RealJuicyTrades. I'm very active on Twitter. Amongst all my social medias, I'm pretty much more active on Twitter. But I sit with a lot of my peers and people that I trade with and people that I know to be phenomenal traders to give you guys the best information possible around trading. But this particular Twitter Spaces, we really nailed it around mindset and, more importantly, following a process over chasing profits. We covered things such as scaling, long-term outlook, and a ton of other stuff that you need to hear. This Twitter Spaces right here, this podcast right here should be saved as a document for any slow day, anytime you have a red day, anytime you got your, you feeling down about trading, this right here is where you need to refer to. Without further ado, let's get into it in 3, 2, 1.
So guys, I want to get this spaces together to talk about something because I've been coaching a lot of new students and I'm seeing, a lot of new students fall victim to these new mistakes, which is that unrealistic expectation of trading. I mean, trading is this game that, and I want everybody to write this down. This is for encouragement, but I'm going to do it at the same time. You have enough money right now to develop a big account. You can trade on any balance, but you have to know what you're doing and you have to know your discipline. You have to become disciplined. So the thing is, in trading, I like to break it down in phases. There is a learning phase. And in this particular phase, let me turn my mic gain down because I might be loud here. Hold on, guys. Sorry about that. I have some adjustments I need to make right there with my mic. Maybe I should turn this down a little bit more. But in your beginning of your trading career, you're in this phase where, honestly, social media is actually, in my opinion, a bad thing, right? If I can go back in time, I wouldn't even be on social media. I'd be paying attention more towards educational content. And the reason is when you start trading, you're so focused on the dollar, you're never really focused on the actual process of you making that dollar. So therefore, when you start generating money trading in any way, shape, or form, we always gravitate towards the result and never the process to achieve that result. And therefore, anytime we do anything that's unprocess orientated, what ends up happening is we end up drifting around because there's no process around. We end up chasing money. I mean, do you think for a second that when LeBron James has a basketball in his hand, I shouldn't say LeBron because, all that stuff that was just going on with him in the Drew League, but just as an example, everybody knows LeBron. But when he has the basketball in his hand, he's not looking to say, look, I got this ball in my hand. I'm going to make $10 million today if I shoot the ball in the basket. He's not really thinking about that. All he's thinking is like, look, I got this ball. It's going in the cold. I know how to dunk. I know how to dribble and juke. This is my process and that's what he focuses on day in and day out, and he gets paid to do that. That's his paycheck. You as a trader, the most important thing that you need to know coming into the game is that trading is not about making money. It's about executing trades. That's like saying Lewis Hamilton, who's probably one of the most known F1 race car drivers, is thinking about money as he's ripping around a corner going 240 miles an hour. He'd die. The only thing he can focus is racing and where the car is going to go. So why would you come into this trading game saying to yourself, yo, I'm going to make all this money, this, that, and the third? So your phases should be learning. Your first phase should be learning because I've already told you it really doesn't take much to take an account from small to big. I've seen it happen. I've done it myself. I've seen other people do it. But it takes a lot to get to that form where you have what's known as a process. What is a process? A process consists of a couple things. A process is a top-down approach of how do you find trades? Well, if you don't find trades, that means, you're trading the same tickers. That's fine. How do you find trades or what tickers are you trading? What initiates a buy? What is your risk? What initiates your price targets, and what do you do in between these things, right? Notice how I'm not saying you need to make money by executing this, that, and the third. I'm saying, what is your execution base? If you can focus on the execution, the money will just freaking fall into your lap. But you have to get to the point where you can get past the learning curves and the discouragements of the beginning. So for me, in my career, when I first started, I ran accounts up. I was that guy, in my opinion, that just got lucky. Like, I'd be full porting accounts, and because I was consistency full porting these accounts, I ran these accounts up. But guess what? It only took a month to blow an account, right? So what did that do? That did nothing. I had no process. And every time I've ever traded without a process, I might have had short-term consistent success, but I never lasted. It wasn't until I adopted a process. So the reality of trading is that it's not this flashy thing where it's like, yo, I make millions of dollars every day. It's more of kind of a boring concept where we're just sitting back and we're waiting for things to happen. And if we don't get this checklist to happen, we don't shoot. Okay. Now, once we get to a point where we have a process and we're having these checklists and having all these things that line up, we're only going to take the trades that line up with your plan. I was yesterday I caught a big short, right? If you're on my team, you saw the short I caught it right at, people say it's the top. I had a reason for getting in that trade. It lined up with my process, so therefore I executed the short. Okay. Before that short happened, we had a run up, and I literally told everybody, I was like, look, I'm waiting for the short because this is my process. This is what I'm doing. This is how I trade. This level, that level, whatever. Right. So the hardest thing that for you to do as a new trader is to sit back and allow the market to come to you. Meaning, I had a short lined up. The market's running up. There's people in this trade long on Twitter, YouTube, all the stuff, people calling out trades 200%, 100%, whatever they're doing. As a new trader, it will kill you because your mindset is like, dude, I'm not making any money right now. And I don't even think my short's going to play out. Right? So when this happens to you, walk away, man. Set alerts. Walk the hell away and stay off social media. Let your trades come to you by executing your process. Now, once you get to that place where you're consistent, trading's fun, man. Like, I literally walk to the market. I've recently, for me, I've been focusing on limiting my risk and adding more money to my trades and growing my account exponentially by doing less because I have more money in my trade. So I have to go back through and look at my trades and figure out how I can manage my risk a little tighter because I'm putting on all this size, right? Without giving the details, I could go into how I trade. That's for another spaces. Regardless of that, the thing I want to tell you is the biggest part of having a process is managing the risk. I mean, if you can't stay in the game or if you can't keep the money you make, why are you even showing up? And if you're having these problems before you go live, and we need to talk about that here in a second, before you go live, you need to address these problems. And the only way we can get people to address these problems and get people growing and get people to go into where they need to go is for them to develop a process by logging. I mean, you literally can't, you know how many people I talk to on a daily basis about trading, and only like 10% of these people even log their trades? I mean, logging your trades is the one thing that you need to do to develop a process and then actually backtest it. Like, what I did in the trading world when I first came into the game was completely wrong. I literally just real money in the trades, and it somehow I ran the accounts up. And honestly, just full disclosure, now that I'm looking back, I didn't know what the hell I was doing. I couldn't explain that to people. Would ask me how I make money in the stock market. I honestly could not explain it to them. I was just doing things, and I was full porting everything that I was doing. It only took 1 month for me to blow that account, people. So we have to get you into what I call a step-by-step process. So step one, when you guys are trying to develop your so-called process, you're going to be trying on a lot of different gloves. Me personally, I love day trading the indices. I love it. SPX is my best friend. Zero DTEs is my best friend. But if you talk to somebody else, they're going to be like, yo, you trade SPX, zero DTEs, you're going to go crazy. You're going to lose your shirt. That's because that glove didn't fit for that particular person, right? And you're going to have to try all this stuff to figure out what fits your strategy the most. You might be the best swing trader ever, but you're trying out day trading. You might be the best day trader ever, but you're trying out swing trading. Either way, the point of the matter is you don't have a process. So you need to log your trades with annotations. Oh my God, please put annotations in your trade logs. Why are you just looking at numbers on your trades? That doesn't tell me anything. I need to see a screen. If you look at my trade log, you're going to see a screenshot. Go on my YouTube right now, and you'll see me posting these screenshots of this trade I took. I call it the beauty of the trade. And I'm literally breaking down everything. Why am I in the trade? What did I do? What was the setup? Did it have volume on the breakout? What is my edge? Okay. So what I want you to do, and this is for anybody that's brand new to trading, is put in the work. And I know this is going to be annoying. And let me give you a realistic expectation. If you're at square one, at zero, you never traded before, in my personal opinion, it's probably going to take you at least years to get somewhere where you're solid. And I'm going to be real with you. People don't tell you this stuff. In my career and with my professional experience, I think it's going to take you anywhere between 3 and 5 years to get to that place where you're like, yo, fuck this job, I'm done. Because you would have seen the market cycle a couple of times. You would have had a strategy that's working out. You know, just because you're green for a week doesn't mean you need to quit your job. Jordan's a good friend of mine that I follow just made a post that says you need 10,000 hours to master anything. So why would you quit your job on week one of a green week? Right. So going back to it, we're going to develop this process by you looking at outside sources. Right. And I would love for you to do this in simulation. There's tons of things on YouTube. I mean, you could pretty much learn how to cut a heart open on YouTube nowadays, right? And why can't you learn a system, right? You need to get that system, there's a lot of free things. There's the Strat, there's ICT, there's all types of stuff. Now there's the paid version of that, right? You can go to a mentor. I'm a mentor. I sell courses. I have a community. There's tons of them. There is enough information. For me in my career, when I first started, I bought everything. The minute I made money trading and I was trying to take it serious, I was buying everything. Like literally everything. Anything that said that they can make money, buy. Because I was obsessed, right? I had to figure this out. So first things first, we want to find you something that's tangible to you. Hold up. Sorry, you unmuted, Chattercoin. You want to find something tangible to you that you can keep and that you can put on. When we do that, we need to do a 100 trade back test. I would highly recommend you get Trader Sync. Long story short, take every trade you take and log it. Like, have a picture of, if you're a day trader, I can speak more because I'm a day trader. I can relate to this a lot more. For me, it was, where's my entry? What's my preferred time frame? What was I doing? So for me, I like to use the higher time frames to plan out my trades, and I use the lower time frames to execute. So what happened was that translate to my trading log. I got a crap ton of sorry, there's a fire truck that just drove by. I got a crap ton of charts from the higher time frames all the way down to the lower time frames in every one of these 100 trades. If you can produce to me, it doesn't even matter about the win rate. I'm gonna say a win rate, but if you can produce to me just a 60% win rate, and your losses are way smaller than your gains, you are golden. You're good to try to go live. So the first thing you want to do, get a system, back test it on paper. That way you develop the habits. A lot of people, when I say paper trading or when I say simulation trading, people go nuts. They're like, nah, don't do that. Don't do that. Don't let nobody else tell you this. It makes no sense for you to try to risk real money on something that's unproven. Let me just say this again. It makes zero sense for you to try to make, even if you're well off, even if you got a bunch of money just sitting in the account. Why would you throw it away in the market? Test it. Make sure it works. Feel confident about it. But the most important thing is you develop these habits early on. So the habits are logging your trades, seeing what's working, going back to the drawing board, readjusting. Trust me, I've been in this market for 10 years. I switched my strategy 3 times. Seriously, the market will change. That's just the law of the lane. It cycles. And in these cycles, nobody's strategy works 100% of the time, right? Technically, because the market cycles, majority of people's strategy is 50-50. They just have good discipline, and they have a checklist that keeps them in and out of certain trades that gives them an advantage. Now, doing this back testing, you need to find something called the edge. Like whenever this edge or whatever it is, whenever that happens, that's the only time you trade. For me, I like liquidity pools now. I've recently incorporated that in my trading. Not too recently. It's kind of been a while. But when liquidity is in the market and it pulls liquidity, oh, bro, I'm excited. If that's not happening, I'm not even thinking about the next step of my process. That's the things you need to develop before you try to get live. Like I said in the beginning of this, you need to get to the point where you know what you're doing so that you can take that small amount and grow it to a big amount. You also have to develop the discipline, the risk management, and the consistency of following this plan while everybody on social media is doing this, that, and the third, and your plan saying don't do nothing. Now, a lot of times we feel extremely discouraged because your system is saying, oh, I don't trade, and you're looking on Twitter and everybody's trading. I've been doing this a long time, man. I'm going to tell you straight up. Just be honest with you guys. I've never really met anybody that had 90 trades in a week and went 90 for 90. That trades legitly, right? I know a lot of traders that go on a week as active intraday day traders. They be like, yo, for the week, I went 8 for 8 or 7 for 9, maybe even 6 for 10. But I never really heard of anybody going 20 for 20, 35 for 35. So what I'm trying to tell you is focus on you and focus on executing the system, because the less you trade, the better. And the best part about having a process is no matter if somebody else is making money in the market and you're not in the market, your process is keeping you safe. I'm pretty sure we all can relate to this. How many times have you had a good week to give it back in 2 days? And in those 2 days and those losses, when you look back at those losses, you're looking back and like, man, I should never even gotten into the trade. I mean, I run, like I said, log your trades. And to this day, the majority of my losses that I take, even to this day as a 10-year trading veteran, are from trades I'm not supposed to be in. You say that again, people don't understand this, right? Because this is where we get to the point where what's the real reason why traders fail? It's a game of you versus you. I mean, you literally know how to win. Go on your trading log. You go on your trading log right now, I guarantee you're going to see areas of consistency. What happened in those areas of consistency? Go through, and if you annotated your trade log, this is why it's very important that you annotate your trade log. When you go back and review these trades, what was working? Go back to your losing streaks. What wasn't working? 90% of the time, that what wasn't trade, that spree was all emotional. 90% of the time, you shot yourself in the foot. Very few times have I ever met somebody that was going through a losing streak and it was their system and not them. This game is literally you versus you. You know how to win. You just have to follow the system. And the most hardest thing to do is sit out moves. Yeah, I said it. I'm just be real with you. I'm a trader too. I know what it's like. It's so hard for you just to sit on the sideline when something's moving. You got to be in it, because we have these goals and ambitions. And a lot of times as traders, we're just starting out. We're coming over some hills. We have some emotional hurdles we got to get over. We're just not at that place where we want to be at. So therefore, the thirst and the drive and the desire to be there creates that necessary, I need to trade every day. I mean, realistically, your process to keep you out the market the majority of the time. Less is more. This week, today's Wednesday. I traded 3 times, man. I'm 2 for 1, but I'm up on a week. Very, very great. Last week, I ended 6 for 7. You really want me to keep going down my trade log? Because my process is making me focus on the highest quality setups. Now, this game, it's all about probabilities, right? So as we're talking about process, your goal of your process is to put you in a trade that has the highest probability of winning from what you know to be true. That's the purpose of a process, right? If I can consistently risk what I can afford to lose on the highest probability trades out there, I should have no problem succeeding. The problem is, and the problem with me in the beginning and trading, this is the thing about trading, it'll tell you everything you need to know about yourself. It's crazy, because for me, the market revealed that I'm impulsive. I never knew that I was impulsive until I started trading. And I never really knew that until I started logging. See, when you log your trades, a lot of times in the beginning, you feel like a dumbass. I'm just to be real with you. When you log your trades, just log your trades for a month. I challenge you to do this. Log your trades for a month. Make sure you have all the annotations. And just go back and look at everything that you've done. Just do it. When I did it, I noticed that I was just doing the stupidest things ever. Like buying the open, just earnings plays, FOMO. It also revealed that not only am I impulsive, it also revealed that my weakness was that I can't accept anything not perfect. And that comes from me being an athlete the majority of my life, right? I played soccer. I did boxing for a long period of time. I did football when I was younger. And as an athlete, we're always competing. I mean, I've been an athlete since pretty much I could walk. So I've always had this expectation to do great in everything that I've done. So when I come to trading and I have a red day, and let's just say it's only $20, back in the day, I couldn't accept that. Like I have a 100K account, I'm down $30. So I'm putting 5K in a trade and try to make 30. Do you see the problems here? And I never really realized that until I logged my trades and went back to doing what I was doing. Now, when I logged my trades, I started accepting red days because red days are going to happen even with the perfect process. And I know that it's discouraging that you have this process that you follow, and then there's days you're going to be out of the market. There's going to be days where you're even red, but there's going to be everybody on Twitter. Like, for example, we're long oil yesterday. We're short SPX. Let's just say you got long Tesla and you get on Twitter and everybody's like tweeting about oil. You're going to be like, damn, I suck. I mean, that's part of the game. I mean, you can't hit every day. But if you follow a process that's keeping you in and letting you stay out of the market, eventually you're going to hit a big trade. And guess what? When you hit a big trade following the process and you stay following the process, the profit stays in your account. Now, here's where it gets fun. Scaling. Oh, my God. If you come to me and you can consistently show me a 20% gain, a 30% gain, whatever. I don't even care about the percentages. You can consistently show me profitability. And when you're wrong, it's tight. Like you're down 10%. You're down 9%. That risk management is so tight, but the gains are so much more than the losses. I'm telling you, you're going to fucking kill it. Okay? So explain scaling. Scaling is basically adding more money to each trade. For some odd reason, this is where traders get destroyed. I mean, they get massacred. Like I've seen people start trading small, and as soon as they size up, bam, done. They're like, damn, I blew up. Why? Because when people start scaling, emotion starts happening. And when emotion starts happening, when your emotions will eliminate your judgment. And seriously, trading should be robotic. It should be a checklist. It should be everything lines up. Here's my probability. Bam, I'm in the trade. Boom, I took the trade. I either won or I lost. I got tight risk. I lost a little. I made a lot. I consistently do this. Over time, I make money. And because I'm doing that, I can add money. But when people start adding more money to their trades and it goes against them, it might still be 10%. But that dollar amount's not 10% anymore, the same 10%. So it feels different. So guess what? You take a red trade and you say to yourself, man, I'm not used to being down fucking $1,000. I'm only used to being down $200. What are you going to do? Most people are going to try to make that $1,000 back. And that's why when people scale, they almost always fail. So what's the proper way to scale? In my opinion, what you should do, and this is how I do it, once you have this system, before you even talk about scaling, you need to meet certain metrics. You need to be consistent for at least 6 months. You need to have this process down, and you need to have this discipline to follow this process no matter what. It doesn't matter what somebody says on Twitter, all this person, because right now on Twitter, the game is who's a better trader. But this is what everybody on Twitter is playing right now. Who's a better trader and who has a better strategy? None of that shit matters. What matters is your portfolio, is it growing? Fuck everything else. Focus on these two things, right? So once you get all past that, then we can talk about scaling. I trade SPX a lot, so I'm going to refer to SPX. So when I was doing a small account challenge, which we ran up, I was doing one contract, literally for like a month. One contract of SPX. When I was right, I would make anywhere between $750 all the way up to $2,200. When I was wrong, I would keep my losses below $300 sometimes. You know, that's a rough number. There's going to be times when shit happens. I'm just be real with you. Shit's going to happen. In life, shit happens, right? So in the market, I mean, shit's going to happen. So there's times I lost $700. Very rare, though. Majority of my losses were kept in check, okay? So before we get to scaling, you need to have all these things in place. Now that we got past that, scaling should be done one at a time, in my opinion. This is a long-term game, all right? It's going to take you forever. This is what you're going to do forever. This is what you're trying to do forever, at least, right? This is what you really, really want to do. You don't want to do anything else. So don't jeopardize trying to rush this. Don't jeopardize your future in this by trying to rush. So for me, it was one contract for a month. And then I had dollar amounts I was trying to meet. So from 10K, get the thing up to 25K. Once we get up to 25K, most people be like, yo, I'm going to buy 5 contracts. Fuck that. We're buying 2. All right. So 25 to 35, we're going to bump it up to 3. I mean, these are 0 DTE contracts that range from $1,200, right? So work with me here. This is the way I did it. So at 35, we're buying 3 contracts. All right. 3 contracts on SPX is crazy. When I was right on SPX, about 3 contracts on minimum, what 20% is going to get you about 1,500 to 3,000 on easy in minutes. But guess what? If you're wrong, you can easily lose that, right? You have to get in the game and get used to risking, making, and losing. And you have to do it slowly and gradually so that you can see your emotional response behind it. If you speed it up once you get in a trade, your emotional response is going to be nuts. He's going to be all over the place, bro. Like, I've literally been in trades when I first started. Like, the first time I ever took a big loss, I didn't eat. What? I didn't eat for 2 days, man. I lost I took a 6-figure loss and I was petrified of the market. And I took that loss because I was doing things to try to make back, honestly, a 2K loss off a very healthy 6-figure account. And that was from me trying to scale up, and then it just all over the place. And that's why you see a lot of traders, they do very well. And it's like their P&L is like a Bitcoin chart. It's like a slow, it's like a fast grind up, and then all of a sudden, dump. And that's because of that emotional response. So how do we beat that? How do you control that? And that's by gradually scaling and focusing directly on your process. Now, risk is the next thing. I can't tell you how to manage risk. I have a certain process of where I get into trades, and where I'm in trades, I have basically based off structure. The structure shifts on me very quickly. I'm getting out of the trade, and I use the lower time frames. I use the lower time frames to execute, but the higher time frames is where I've planned this out. Buy here, we're going there. This is my target. That's my trigger. All that's done on the higher time frames. But when I get in on the lower time frames, my stops are almost at the bottom of these candles. And for me, if I'm stopped out, 7%, minus 4%, minus 3%. That's just my process of managing risk. Now, a lot of people on FinTwit and people like that, they look at that and be like, man, that's nothing. But for me, it works because I hit big trades. I've never had a problem making money. I'm going to just be honest with you. I'm going to say it again. I've never had a problem making money. And I'm pretty sure the majority of people that do trade honestly never have a problem making money. But the majority of people who do trade have a very big problem of keeping money in their account. That's why most people aren't successful. If you go through your trade log, majority of people have hit these big trades, some type of trade, but that big trade just made you break even. That's just from a lack of risk management. You have to figure out how you're going to manage the risk better. So for me to you, as we're developing these processes, the first place you want to think is how can you manage the risk with any strategy? And if you backtest the strategy, don't pay attention to the win rate, pay attention to the winning percentages and the losing percentages. And if you keep constantly kicking out these bigger losses, you need to change something up on your strategy, whether it's buying earlier, whatever it may be. This is where you want to reach out to your mentor or get on YouTube or get to studying something of that nature and figure out that part, okay? Lastly, what do I want to cover? Lastly, with this process over consistency thing is just a realistic expectation. I mean, you're going to have what I call just a winning season. Like, everything's going to be great sometimes. It's going to be like, dude, the confidence is key. Everything's lining up. The market is coming along with you. And then you're going to have losing seasons. Now, when these losing seasons happens, you have to rely directly on your process of getting inside these trades. It is very important that you follow this process of getting inside your trades. If you're going to trade with live funds, anytime you're trading outside of your trading plan, it should be done in demo or paper trading or something of that nature because you don't know the outcome. The realistic expectation of trading is that, it's going to take you a while to get to where you want to go. The majority of us have these crazy dreams and ambitions and all the stuff. I didn't buy some of the stuff that I've always wanted to buy until this year. I mean, I've been doing this for 10 years. Just honestly with it. I mean, you basically, as a trader, going to a place where you're self-employed. No, there's no way around it. Trading should be treated like a business in all metrics. So because you're self-employed, if you ever live self-employed, you're going to know that money's going to come in chunks. Like the majority, especially when you first starting out, there's going to be times when money's everywhere, and there's going to be times when money tightens up. That's just how a lot of entrepreneurship works, right? You have your winning seasons and your off seasons. In doing those off seasons as a trader, you have to be able to walk away. I mean, if you haven't caught this by me ranting on and just talking about the market, the most money I've made is when I've traded less. Why? Because the majority of the time when you're trading, you're risking. And the more risk that you take on, the higher the chance that you're going to get destroyed. That's it. If you trade 20 times a day, there's a big chance you're going to get destroyed. I'm just going to be real with you. There's a big chance that you're going to go through an emotional downfall. And that's what's going to destroy you. Not the trading, it's just the emotions and the decisions that come after the emotions. So if you can stick to the realistic expectation of trading, that this is a journey, and you're going to build your trading account brick by brick like a house, right? Well, nowadays they come in and they just, helicopter in the house, right? But back in the day, they used to put the cement in there, and they put a brick down and brick down and a brick down. That's how you build your account, one trade at a time, maybe even 2 trades here and there. But point of the matter is trade after trade that meets your process. The most successful traders I've ever met and talked to and ever traded with and had the honor, because I've traded a side by side with some, in my opinion, the best of the world, people that aren't even on social media. Like, just because social media is here, there's so many people trading outside of social media that are making ridiculous amounts of money, and they don't even have an interest of even being on social media. They're living their life. They're doing their thing, right? This is getting on and being an influencer is to help people. Now, honestly, that's the way we do. You give back. That's how you get things from the universe, right? You give back, so you get things like that. But yeah, going back to it, the commonality of all these guys who are making these big amounts where everybody's striving to, they have a process, and every trade in their trading journal is a byproduct of them following their process. The minute you start putting trades in your trading journal that does not follow your process is usually when you see people blow up. And me personally, anytime I've had a massive drawdown or just been struggling at times, I've gone back through my trade logs, and I've noticed that trades were missing from my trade log, meaning I wasn't logging. I mean, my best consistent methods and spurts have always come from me logging my trades, man. Like, trading has changed my life, bro. Like, I've been around for a long period of time. Like, when I was on FinTwit back, it wasn't even FinTwit. It was just Twitter. It was me, Mike, and Elite Options. That's the only people I knew that were out here with chat rooms. And besides Warrior Trading and Raging Bull, right? Besides that, I really didn't see that. We've been here for a while. I'm going to tell you straight up. The only way to succeed over time is by trading the process. Don't let Twitter fool you. You don't need to have 95 trades. You don't need to be trading every second of the day. You just need to be executing this process. And as you execute your process, start doing things to focus on the mindset. Read books, do other stuff, learn. You know what I mean? Like, how long are you in the trade? If you're a day trader, how long are you in the trade today? All right, what did you do outside of those 30 minutes you were inside that trade? You stared at the market. What do you think you're going to do? Instead of staring at the market, pick up a book, learn about mindset, review your trades, log your trades before 4 o'clock comes so you don't have to do it in the second half of the day. Majority of us got kids and families and stuff going on outside of trading. Get it done in the trading hours. Increase your knowledge during the trading hours. Use your time wisely instead of sitting here trying to catch every tick and tack. It's not about that. I'm not, like, when I get into a trade, let's talk about this too. There are a lot of traders out there who try to catch every move, right? And if you look at every move, let's just say intraday, sometimes I give ES, or just stocks in general, even Tesla, they'll give you like a 3 to 5 handle swing. And then people get in those trades and be like, yo, I killed it. No, you didn't. You took unnecessary risk. For me, when I take a trade, I'm talking about handles. Handles is just a point on ES. It's just easy to relate to everybody and communicate the things. When I get in the trade, I'm not really trying to risk more than 7 handles. It's tight stops, preferably 5. And I'm shooting for 20 to 100. If that's not happening, I'm not trading. But guess what? That don't happen every day. It happens. Sometimes it happens twice a day. It doesn't happen 30 times a day. And that's why trading less is making more, because you're focusing on quality and catching some of these moves instead of I'm in, I'm out, I'm out, I'm in, I'm in, I'm out. Next thing you know, you drew your account down. All right. But yo, that's it for me. Before I go, I wanted to throw this to Chatterquant. Epic software, by the way. Check them out. Make sure you give them a follow. I'm going to go ahead and throw you the mic, let you say a couple words or whatever you want to go ahead and do. But what's going on?
So actually, when I tried to get on there earlier, I was just going to piggyback and riff off what you were saying. Me personally, I mirror everything you said in the way that I trade, and it took years to get a good feel for how things are going to flow. But I think where we have taken a left turn, and it's actually where we developed our company out of as ChatterQuant, is that crazy run up where you saw that idiotic couple talking about how all they do is pick a stock and put money in it and it just goes up. Uh, that's not reality. Unfortunately, as you know, we had pretty much a year and a half of just the most miraculous bull run in probably market history. Unfortunately, that's not the market. You have to develop a system that plays every possible scenario that you can be presented with on a daily basis, and for me, that involves again having tools like we've created here at ChatterQuant, where man, we get this giant run. Everyone's playing. Retail traders, the number grows exponentially, and what does that do? What does that? How does that affect the market? How does that affect a trade? How does it affect an equity? And you look at it and you say, well, there's a voice to it. There's a flow. There's a sentiment. Sentiment is what affects trades. So we capture that. We've added it to our, as our team, we've added it to our individual trading. We use our system to grab what people are focusing on social media, and we developed an algorithm, and we fire alerts based on that algorithm and what people are doing and saying about a certain ticker, and or what news is coming across, and those are the things that we pay attention to, because no matter how new you are to this, you're trying to grab as much information as you can about something. And when you're hopping blindly into something, you're going to lose. And just as an example, I personally I did a test on this. I put my own money on it. I developed a risk system for myself, and it's very simple. It was what I was willing to lose on a trade to stay, in order for me to stay in it for an extended period of time, to see if I'm going to work out a profit. And I stuck to that. For a month, and in that month, just playing within the due diligence that that was part of my system, using ChatterQuant, and also staying true to my plan on my percentage of risk. That account went up, I believe it was 44%, just staying in trades and exiting within my system. That wasn't trying to ride things out. That wasn't trying to get out of something the moment it turned red. It was, I believe I was working 5 and 10%. So just doing that, my account, with my due diligence, with the knowledge that I'd procured from trading, and the system that I built, and how I was researching things, like you said, you're in liquidity pools. I went to the most basic thing that I could, which was volume analysis. And I looked for my setups, and I just played within that risk system. And then the next month I took that system off, and I went into things blindly, effectively. I played them as FOMO, I believe is the term you used earlier. And that account dipped, I believe, 26% that month. I was negative 26% with my risk system. So understanding your risk, and developing your system around that, but also knowing what tools work for you, what voices make the most sense to you, like Juicy here, or Financial Journey, who's joined us. Knowing what you're looking to do and how you're going to do it is key. In the moment that you start to see that a plan that you've developed, a system you've developed, starts to change, it doesn't have the same kick, you need to step back and look at what's changing within the market. And personally here, it's very easy for me to do that because I am able to understand where retail trading is pointed. It's an incredibly powerful tool that we have to be able to understand the voice of retail trading as a whole. And if we're and using BBBY as an example, it was a monster amount of sentiment, and it wasn't just retail traders that were on it. And when those alerts fired on our platform, it gave us, I think it was a $23 profit range from the time we fired it, and it was days. It wasn't minutes, it wasn't hours. You had days to figure out what was going to work for you, follow the flow, the volume, the chatter, and develop your plan around that. And really, those are the trades that, when they happen, they can absolutely make your trading career. And if you aren't paying attention to those things, you don't have a system in place, you're either going to miss them or you're going to trade them into them and out of them at the wrong time. So everything Juicy said here, being patient, I'm a big proponent with people who ask for advice. Paper trading, when you're learning, paper trade something. If you're not sure, don't get into it. Don't throw good money after bad research. No research. If you have a bad feeling, don't enter the trade. Me personally, I've taken 2 trades this week, and in Chevron and Tesla, and those are the only 2 things that I'm paying attention to because I know oil and I know Tesla. I know Tesla is traded like SPY, like people trade SPY. So I know my levels. I know what a split brings to the market, what kind of opportunity that creates for anyone who's playing into those trades. And then I just simply flip over to our platform and I follow what people are saying. Like obviously Tesla has, picked up in chatter a significant amount today because my thesis was that Tesla was going to finish as close to 900 as possible to make that 300 per share split, more palatable for people. So when I felt it had bottomed, I grabbed shares there, and I have rode them up and taken. It's not a huge profit, but it's within my system. It's the type of profit I look for, and in doing that, I'm able to create a safer trade, which I'm exceptionally conservative, and it flows into my system that I've taken hit after hit to learn and develop for myself. In speaking with guys who've been doing this, 10 times longer than I have, some of them will tell you they've lost $1 million just trying to figure out what works for them. And that seems like an insane number, but it's that's what trading is. And until you develop that system like Juicy's talking about, and things start to make sense for you, and your trades start to play into it, you're never going to win them all. But it's going to show you that all that work that you're putting in, the 10,000 hours that it takes to master something, is starting to add up. You're going to start to see it, and at the end of the day, if you can't develop something that works for you, you need to step back and find somebody who can point you in the right direction. And that's what people like Juicy are for. That's what Financial Journey, guys like him do. That's what I used to do. And it's invaluable because you're paying for their pain. You're buying their pain. They've taken those hits, and what is ultimately going to guide you towards a system and a plan that works for you. No one's going to sit there and tell you exactly what to trade and when to trade out of it. If you're looking for that, you need to move on. Stock trading is, in the execution of your trades, is based on a system that you develop, not a system that they develop. You can take parts of their system, but it's not always going to work for you. Find someone who you can listen to, find someone who can guide you, and then piece in the tools. Like Juicy's talking about tracking his trades. I developed a tracking sheet, very extensive, just for myself, and it works for my system exactly, because I couldn't find one that I liked just for what I was doing. But if I have to go into a journaling and a tracking software, I believe the most efficient and useful one that I found is TradesViz. TradesViz is incredible. It does all the analysis that you could pretty much ever hope for, but it gives you the ability to track what you're doing in a very clear-cut way. And that's important, that journaling, having it done, staying up on it, because if you're a guy who's in here day trading and scalping the shit out of things, that can be that's very tedious. So you got to find what works for you. You've got to find the things that help build on your system. And I hope my platform is part of that. I highly suggest it. I use it, like I said, I use it myself. That's how I came to work. I came to work for this company. I started using it. I know what the value is in it. So if you're feeling lost and you need things that you need to change things, or things aren't making sense, or you feel like you're just losing every trade, step back, find somebody that can kind of just help center you. And if you can do that and get yourself on firm ground, you're not going to come in here and just crush the market right away. It's not the way things go. That period that I spoke about in 2020, that was not stock trading. That was not the market. That was just luck, effectively. So, and we don't rely on luck as traders. And if you do, you're going to be very, very unsuccessful in this. So I appreciate the fact that you guys came in today. Like Juicy said, try to give everyone to your left a follow, help them out, give them some equity for being here. And if you guys need anything, if you want to check out our software, I'd love to have you guys demo it. I'd love to, show you what we have going. And obviously we have some new product that we are, some new tools we are developing, and we're very close to pushing out, and they are sensational. So go to our homepage, chatterquat.com, go to the enterprise section and go over a brief, there's a brief overview of what we're looking to put out. So we're very close to launch. And when that happens, people who are using it, I think, are really going to, really, truly going to benefit from what we have in store for you guys. So again, thank you.
Hey, appreciate you for coming on, and you can stay on too as well. I just want to say a couple of things. I'm gonna throw it around, and honestly, guys, if you're listening in the crowd, you want to come up, ask me a question. I'm here for a little bit. I got a little bit of time. Raise your hand or put the request in, and I'll approve you and ask me whatever about trading or market, stocks, whatever. Hit me up. Let me know. But one thing I wanted to say, going to what he was trying to say, is, and I'm gonna throw it to AJ next. I mean, if you're joining a Discord with the purpose of this is the craziest thing. I run a Discord. So people come in all the time. They're like, yo, X, you make a lot of money trading. I'm going to make a lot of money trading. I'm going to just do what you do. Right? That doesn't work for everybody. Right? Because there's something called alert lag. Now, I do my best to try to minimize that by putting you on a live stream. You can see my screen. I'm on Discord. You can hear my voice. I'm usually like, yo, get ready for these puts, guys. I'm hitting these 40 puts. I let you know the feels. I do everything I can to let you know what I'm doing as it's happening, but you still might not get the same feel as me because I'm pushing the button. If you could just learn what I'm doing, whatever your Discord leader is doing, and then do it the same time he's doing it, that'll take you so much farther. And if you are experiencing success, a lot of people are experiencing success with trade alerts and things of that nature. You are now dependent upon that person. What if that person takes a break? What if that person goes away? What if that person gets a car accident and it can't do it? Now you can no longer feed, and you quit your job to do this. You can no longer feed your family. So it's in your best interest to go down the journey. And I know the journey in the beginning is very difficult. I've taken a lot of losses. I've actually blown accounts. And I told you when I took that first loss, I didn't eat for a couple of days, man. It was real, right? It's worth it if you're putting in the work. Do not go down this journey if you're not going to put in the work. This is a hard thing to do. This is why most people don't fail. What do I mean put in the work? Everybody talks about putting in the work. In the beginning, for me, 200 to 300 charts a day.
Yep.
Any amount of free time I could use to learn, I'm going to be trying to learn. If I'm buying a program, I'm going to complete the program. I'm going to log every trade. I'm going to ask questions to my mentor. Why this didn't work? What am I doing wrong? I'm not sleeping 8 hours a day.
Right. Right.
You know, I'm up. It's 2 a.m. I'm studying.
This is an 18-hour-a-day job.
Until you get to where you want to get to. Like, leave that party a lot alone. Put the blunt down. Put the liquor down. All right? Pay attention to what you're doing and try to learn this, because you can do all that blunt, liquor, party stuff when you get to the other side. That's the fun part. But it's that transition, because you're going to get beat up. I'm telling you, this market going to punch you in the face. I don't care who you are. You're going to get punched in the face. It's about how hard you can get back up and keep going. And it's very discouraging, because I'm going to be real with you. In my journey, when I was telling people I'm going to leave my job and I'm going to do this, I had to sit at the dinner table with people. And I was a kid at the time, sitting in the household, and everybody's like, look at this knucklehead trying to trade stocks. So everything around me is like, don't do it. You got to fight through that. You put in the work and believe in yourself and try. But you have to learn. A lot of people try. But when they fail, they try the exact same thing that failed them. And I'm like, why are you doing that? Right? The difference is try, back test, learn something new. That didn't work. Throw it away. Throw everything about it that you can't resonate with. Throw that shit away. Get something else. Back test. Try it again. Something's gonna hit. I promise you, something will hit. But yeah, I'm gonna throw it to AJ, and then I'm gonna throw it to Chris. What's going on, AJ? By the way, I want to say follow everybody here. Chatter Crunch, the service is amazing. AJ's pretty much one of the smartest people I know, and Chris, his calls are on fire, man. And he's not over there day trading every 2 seconds. He's like, yo, buy natural gas. He's the only person that I've seen to say, yo, buy natural gas and be in it for the whole move. I'm just saying, I call it like it is. But what's going on, AJ?
What's going on, guys? How are you? What's up, Chatter? Nice to meet you. I've heard about you guys in the community, but I don't think I heard you guys talk.
Nice to meet you.
Don't want to talk, bro.
Nice
What's
to
up,
meet
man?
you
How you doing? I'm not the one of the smartest guys, Juicy. Don't put me up on that pole, bro. I'm always learning. I'm always grinding. So there's definitely a lot more smart.
Smarter than me.
Yeah. I don't know. What was the initial topic? I came in a little late. I heard Chatter talking.
Whatever. We're just talking about process or profits, but whatever, man. Any type of advice, or if you wanted to skip it, whatever. We're just hanging out at this point. I was going to bring people up, by the way. If you guys want a Q&A from some pros, come on up, question, I'll bring you up. But
yeah. So, I mean, Juicy hit it on the spot. Chatter hit it on the spot. You got to develop your system. You got to develop what works for you. Right? I've gone through my Ring of the Rosie, right? So my system is very different than most people now. Like Chatter said, he's built his, right? And I didn't hear the full story, brother. I apologize. I heard the back end. So
no, I didn't give it out. What my plan is, man. I mean, we don't have all.
Yeah. So like my so my system's like a 3-pronged approach, right? It's one. I spend a lot of time studying macro analysis and the impact of that in short term, long term, medium term, right? So I do a lot of articles, I do a lot of writing, I write for Barchart, I write for a lot of stuff, right? I do that shit for fun. I spend myself teaching all that stuff for hours every day. And there's a lot of FUD out there. There's a lot of people who get tripped up. There's a lot of people who fall into bad traps. I don't listen to any of the media, any of those guys screaming the loudest. If you're screaming the loudest, that means you're probably the wrong most. So I ignore all that crap. So my point is to understand the impact of that to the markets, right? Markets is always forward-looking. So I'm trying to find the play, the move before everyone else is, to be the contrarian, or like Chris said, natural gas before everybody starts talking about it. Once everybody starts talking about something, right, it blows up on the quant, it blows up in your algo, it blows up whatever you follow. Once it gets overcrowded, that's when you know liquidity and people are actually exiting the trade, and you become trapped. You have to get in and ride the wave up. You can't be waiting for the whole wave to have gone and then get in, because then you're on the other side and you're the exit liquidity, right? So I try to keep people privy of that, so you're ahead of the game a little bit. And then the way I trade, right, I work a regular job, work a full-time job, I travel, I'm on the plane, whatever, so I can't watch charts all day. So my style is more on spreads. It's not timing the market for a perfect 5, 15, 30-minute entry. It's taking advantage of data. It's taking advantage of a move for a couple dollars for a couple days, maybe a week, maybe 2 weeks. It's taking advantage of condors, all that stuff, and then gamma and delta based hedging, right? So understanding where institutional money or large money is sitting, understanding where and how the price action reacts around that, and playing my tickers that I like to play, the strikes, the information around those values, right? So for example, people talk about squeezes, gamma squeezes on memes, right? So ignore all that. because you can't time that perfectly. So you cannot FOMO and missing a $20 move on BBBY, right? So look at ETFs, the most liquid options out there, right? When SPY moves $7 in one day or $8 in one day, do you think retail is moving that? No. How is a $400 ticker moving $8 in 5 hours? Large amounts of money, large amounts of positions being closed. So you got to start digesting the data behind that. Why is that happening? Well, somebody either A, went upside down on their bet and they're short covered. In order to do that, they have to buy the shares to offset their loss. Or B, everyone's really going long on it and opening up new positions. So it's understanding that information. That's the way I trade. It's understanding for me, knowing when short covering is occurring, when to go against the trend, when people are buying positions, when to go with the trend, right? So this rally that started from 375 to 405 was all short covering. You can look back, I can explain that detailed information, but it was enough large amounts of money covering all their positions all within the same amount of period of time. The more they closed and the faster they closed, the more it kept compiling and the more we kept running because they would keep buying the stock and the shares. And then after a while, actual buying actually started, but now that buying is turned off. That buying turned off at 423. We had a couple more dollar run after that. You can call it what it is, but now we are where we are. So I'm not seeing new liquidity buying, actual physical buying entering the market. I'm actually seeing a lot of shorts now being repositioned. So that's why I am privy of saying, hey, we're going to have another rally to the upside. That's the type of data I like to use. That's the type of information I like to see. That's the type of trends. That's how I trade. So when I make my plays, my spreads, the condor straddles, my risk to reward is one way or the other, but it's taking enough time to be right on them.
Right.
So and then combining the macro with it, right? Because I watch yields, I watch 10 years, I watch 2 years. I talk about this every freaking day on every space I'm on. I watch DXY. You got to know how all that stuff impacts what you're investing in, whether you're a day trader, a swing trader for 2 weeks, a long-term trader, or a long-term investor in your 401k, right? That's how you got to position yourself. You got to know how all this impacts what you're buying and selling. So that's where the reading comes in, the learning, the correlations. And no, the market's not perfect. It's not going to make sense. You're gonna do all this one day. You're gonna wake up. Why are we running and why are we dumping? We shouldn't be. Well, you just have to wait for that trend to settle down, right? This whole run was way overextended. So I've just been waiting for a little mini correction because none of it made sense from a technical, long-term health standpoint for these companies that report into these earnings in the future. They're all going to do much worse. So they should not be valued where they are. So people are enjoying the run. Let them enjoy it. I'm just sitting back and I'm just waiting, right? So that's the way I do it. And, like Chatter said, there's sentiment out there. There's tools that help you catch these things, what people talk about, right? I use TrendSpider, great charting platform. I use TraderTix, another great platform. I haven't used your platform, guys, Chatter, but I know many people who have. So shout out to what you guys do. I'm not saying I'm not going to try it. I just, being honest, haven't had the time to get around to it. And that's really it. I mean, other than that, I do a lot of help whenever I can. Juicy knows me. I'm always available for any questions. I'm always around when I'm not working.
AJ's the man. Be sure to give him a follow, bro. Appreciate you for coming up. Again, guys, I have people coming and going. Be sure to follow everybody here speaking. We're going to throw it to my man, Chris, man. What's going on, brother?
What's going on, guys? I just wanted to jump in here, man. I saw the topic of conversation, process over profits, man, and it definitely, got me in a mode to challenge.
By mistake, bro, I dropped my phone and I tried to pick it up midair. I hit that button by mistake.
No, you're good. It's just definitely my thing, man, and my process over profits. And I see a couple people that rock with me. It's really this simple: less trades, higher conviction. A lot of people ask me like, dude, how are you so accurate? And it's like, because I look at the macro trend, I trade a lot of supply and demand. And when I trade those things, it's really hard to miss when all you got to do is read the news and give yourself time for it to work out. Right. Like if we see, hey, China demand expected to decrease over the next 4 months. take a China trade to the short side for the next 4 months. Right? It's not rocket science. To be perfectly honest, I probably have 6 months to a year of chart analysis, that being an expert. What I am really good at is making sure that the fundamentals line up. I tend to be what I like to call fundamentally phenomenal. I wanted to point out to you guys one of the trades that I was talking about and that I have been for some time, and it's still oil, and I still believe that it's the play. And the thing is about that trade is you got to follow the storyline, right? Warren Buffett buys buys stocks or anything on a 25 to 30 year basis. He probably won't live to see the profits from oil, right? But here's the thing: we already know that we're tapping into the reserves at an astronomical rate. To see it happen 2 to 3 times in a year is already unheard of, but 5 to 6 times, which is what we've done, right? Tapping into the reserves is absolutely leaving behind a worse world for our children and moving forward, right? And so when you think about where oil is going over the next 20 to 25 years, well, I say at some point it's going to get to the point where things get scarce, right? That's the story of supply and demand, scarcity. And if you think about how the human race moves towards scarcity, let's just take another topic, right? I think I was bringing this up in one of my classes, and I was saying, hey, what happens when you get an endangered species, right? An endangered species then becomes protected. There's then laws against having access to them at consumer level rates, right? You can access certain things when you have the amount of money to do it, but like, if you're looking at the long sort of things, as the scarcity starts to play out, the price starts to go up on the ticket, right? There's money to be made, but there's a lot of money to lose if you're on the other side of this thing. And that's why people are looking at the ownership of oil at this point. Warren Buffett is playing that type of game, right? And then it's funny that I was talking about that 3-4 days ago, and then it comes out today that California is going to ban gas vehicles after 2035. So the
So
story still is.
So I wouldn't say that's new news though. They
hold
mentioned
on,
that they
hold
mentioned
on,
that earlier too,
guys.
Chris.
Let me step in on all this, and it's great information. But you know, we've got to understand a lot of the people that are getting into this. You guys are fucking smart, plain and simple. You know your stuff. A lot of these people who we're dealing with, they don't have the advanced knowledge or the ability to dive into things like that right away. And that's why you guys are so important, because you teach them how to do that, and understanding, global oil ownership is an incredibly complex thing to do. What I have found is important is not discounting the importance of FOMO and FUD. Those things are so important. And like you guys are talking, you're talking news. And I have to go to Chris and I have to go to AJ and I have to figure out what they're saying individually and then look into it if I want to know exactly what you're talking about. If I want to know what, as an example, I said I traded Chevron. If I want to know what Chevron's doing or global oil ownership, I can put in on my platform. We made this simple. We put in the ticker and then a related word. And one of our tools allows us to find every news article that's been put out on social media, reference anything about that. And it all kind of spider webs together and aggregates and allows us to get all of that information into one spot, so that everyone who uses that platform, uses our alert system, uses our tools, they're able to find a focus, a general consensus on that topic, and it generally points to the most salient thing. So, again, great information that you're giving. I just think, and I'm not insulting you, I just think that from doing so many of these, I try to keep it super scaled down in terms of the knowledge that I'm spitting, because a lot of the guys that come in here don't have your ability. And focusing on keeping things simple, especially when they're in that learning mode, that infancy in their trading journey, is key. And being able to search out and seek out things in the capacity that I just discussed is so very important. So great stuff. I just wanted to get that in case we close this before I got out of here.
No, for sure, and I appreciate you, but I'm going to push back a little bit and say that I think that's where a lot of beginners should start, and say I think that a lot of beginners should start with the things that they do know. For instance, some of the first trades that I've had some of my students take, right? We just sat around and we literally formed a thesis on a sector that we could trade, and it worked out, and it was during COVID. And guess what the trade was? We took Logitech from $33 on the fact that, oh, home office equipment is probably going to explode. And we took it for the duration of COVID, right? These are beginner things that you can start with, right? That is a beginner story of support
100%. But
that
it's still aggregate. It's still all of that data, and you guys had to sit down as a group and get that right. That's what I'm saying. Like, I'm trying to simplify this, and being able to take that information and gather it in a split second is key. And that's what I'm trying to tell you. What I'm doing, I think, would help your group. It would make it simple. It would say, hey, what's going on with this? We don't have to sit down and pull apart 80 different articles to do it. We can just pump in a keyword and a ticker, and we get everything that we need.
Hey man, much respect. I definitely agree with you that there's some way to consolidate things, but for me, I think again there's a process as well. AJ, I know you've been trying to get in there. My bad. Go ahead, bro.
Yeah, I was going to say, let me hop in real quick, AJ. I'm open for debates, man. I like, as long as we not over here, fuck you, right? I'm pretty much open to whatever, right? So let's just throw a hand raising system on, and just go that way. It's like everybody gets to express their points, right? We'll go to AJ, then we'll throw it back to whoever got the hand up. What's up, AJ?
Yeah. So what I want to say is, both systems work. Understanding a system that pulls the data for you helps as a beginner, right? But when you get to that point where you can pull that information yourself before everyone else does, that's how you get advanced. And let me further explain what I mean by that. I was on a space in January, February talking about biotech. Then I was talking about energy. Nobody was talking about it. 3 months later, everybody's talking about it. What happened once everyone's talking about it? Everybody got banged. Oil was at its 18, it fell down. Energy outplayed. Biotech done. I was talking about shorting high beta a month and a half ago. At 52 ARC and all that stuff, I've been eating. So, what do I mean by that? You take the data you have now in front of you, spend the time learning, use a service like ChatterQuant, use a service like myself, like Juicy, whatever. Learn that stuff. Learn the trends. Learn. Everything repeats in cycles. The whole market moves in cycles. Just because you miss the opportunity to go long on oil or natural gas or whatever in 2022 does not mean the opportunity will not be there in 2024, 5, 7, 9, 31, whatever. The point is, next time when the opportunity arises, you're already ahead of the game because you might have missed the first time, but you learned how to put the pieces of the puzzle together for the next opportunity down the road, right? So that's the key, because using the information at hand to be ahead is how you get in when not either the big boys are talking about it, but when not everyone's talking about it. Because once everyone and their mom and their grandma and their 90-year-old cousin are investing in it, the trade is done. The sector is done. Everybody knows it. Market institutions at that point have already made the profits more times than not. They don't want you to win that easily. They're not going to make it that easy for you, and that's when you end up being their exit liquidity. Now, I'm saying it can work in your favor, but more times than not, over the long run, if you're in this trading game for 20 to 30 years, if you're entering on the back end of these things, you're more times than not you're going to lose than you win. So use the information at hand now to get to that position ahead of time, which is why I agree with Chris and Chatter. It's a two-pronged approach. So you got to start somewhere, right? It can be overwhelming, but you got to start somewhere. So right now, right, everyone's re-talking about oil for a good reason. Everyone's re-talking about natural gas. Everyone. No one was talking about it a month and a half ago, right? And everyone's now talking about solar again. So you just start paying attention to those trends. Start to see the behavior of how things go, and then start to realize when things get overplayed, so you don't get stuck holding a position that you think still has more potential, but it's already played itself out, right? Unless you're sold on the technicals and the long term of it for like 5, 10, 15 years from now. That's all I want to say.
100%. We'll throw it to Chatter.
No, I think that's very spot on. And again, I hear exactly what I want to hear when you say things like that, because it's again, it's that sentiment towards that stock or that industry or sector that that is ultimately going to move it. And again, I know it is, yes, it's shameless self promotion when I say it, but the reason we created this is because it works. And you guys are, you seem like you're tremendous due diligence based guys, and your charting abilities, I'm sure, are top notch too. The thing is with that data, um, that market data stops when the market closes. And like you said, um, you don't want to get in this at the wrong time, too late, feel like you missed out. So having the ability to track what's going on with something like that, or with oil, when the market is closed, and understanding how we're viewing it as a whole is crucial. And especially in playing it, as you said, we don't ever spend enough time discussing the short side of things. And knowing that once we all pile into something like oil, the volatility on it is absolutely insane. And that's when, the big boys, the smart traders, they start taking things short. They start playing things in the opposite direction. They're usually a step ahead. And that's why sentiment and due diligence is so important. But everything is time based. And when you go to measure something like that, you have to understand how far into a move something is. And where most of the traders who've come to me personally and have lost their ass, like I had a guy retire from quit his job. He had like $150,000 liquid that he could play with, and within 6 weeks he went from 150 down to like $23,000, and his wife was threatening to leave him, and he just didn't know what to do because he didn't do what you guys initially discussed, which is you create yourself a nice foundation of especially a support foundation, that if you are trying to get ahead on something and understand something or find the right tool to use it, like we're not advisors here. We're a tool based company. So you find what works for you, and you find the group that works for you, and then you exploit that to its fullest. And you don't step into things. You don't put yourself in harm's way financially just because you feel like you should be trading. And going and capturing capturing the data that you guys are talking about for the proper due diligence. I meant it when I said this is an 18-hour a day job. When you want to sit down and do what Juicy does, what Chris does, and I think AJ left, what AJ does. It's an incredibly time consuming and job just to know that you're going in with the right mindset for the next day. Now the problem is, again, that data stopped. We believe in tracking the sentiment towards that stock after hours, during it, capturing it, using that data, and trying to get our users ahead in the exact same way that Chris has talked about and AJ keeps talking about.
Yeah, and that's Chattercoin. And I think this was like a friendly debate too, man, guys. I know it sounds like we're going back and forth, but I think the core concept is that what he's trying to say is, Chattercoin has a tool that can simplify a lot of these things for you, right? And no matter how you can approach it when it comes to fundamental research, it can be a heavy due diligence thing. It can be time consuming, and for a new user, it can be overwhelming. And Chattercoin makes that easier and puts it in one place. So I totally agree, man. And honestly, I really like this conversation. I like the back and forth.
It's great. Yep.
I really don't like to have the challenge. Like, I'm X, I'm not going to challenge X. You'll challenge me, man. I'm cool, man. I like to talk about things. As long as we're all respectful, I'm good. I love this type of conversation.
I would, yeah. And Juicy, my goal is to get guys like Chris. And Chris, open your mic up, dude. My goal is to get a guy like Chris to come and see what we're doing, to see the advantage that we're capable of giving, because we're the only ones that do what we do like this. We're the only ones. It's a truly unique platform and tool. It's a bunch of tools. It's not just one. But I want guys like Chris, because when you listen to him, you can tell the guy's a damn genius. I want people like that involved with what I'm doing. I want to say that, you know what, I didn't do it for Chris, but my tool helped him, and this is how. And because he's almost going to be capable of giving a better synopsis of what I do and what we do than I am, because he's using it every day. I don't have the luxury of hopping into the market like I used to. Chris lives in it, man. He's fighting in it every day, and he's helping people with their journey. And ultimately, that's what this is all about. That's how I got started. And, you know, I want to support that. So yeah, hell yeah. I'd love to debate with a guy like Chris. And I'm not really debating him. I'm just supporting him, and I'm on the other side of it right now. So I just want to make sure that my side's represented. So I guess it is kind of a debate, but
I don't even think that it's necessarily a debate. I think it's just a comparison of styles.
Absolutely.
Right?
Absolutely.
Because for me, like, the thing that has given me the advantage is the exact thing that you help with. Like, for me, right, like, I can trade technicals, right? I'm not the greatest at it. I'm better when I'm in my niche, which is plain supply and demand amongst commodities and different assets, right? But the thing that really makes me stand out as far as what I do is that, like I said, I consider myself fundamentally phenomenal. And how I get there is I read 3 times more than the average human being, right? And I can't expect that out of everybody. And so I do believe that services like yours are there, right, to kind of bridge the gap. And I get that. But for me, you know, plain old good old DD, right? It's not, you know what I'm saying? I'm not saying that there's not ways to consolidate and condense, because that's what we all should be doing. But what allows me to get ahead of it a little bit is to just go in depth. So I do appreciate your service, and I definitely would like to try it out for sure.
Yeah. DM us. I'd love to talk about it more. But yeah, I need, like, it is that due diligence. But, you know, like, the thing that I found when I was doing this on my own is that ultimately I feel like I'm out in the field by myself, and if I don't have everything at my fingertips, I feel like I might let somebody down, or I might miss something. And that's you know, again, that's why when we look at things as a whole, like the one thing that isn't being tapped to help traders is that measure of sentiment. And you know, like, I don't know if that's something that you include in your daily, Chris. Like, do you ever discuss that with your traders? Do you ever bring up some?
To be perfectly honest, the whole reason, like, Twitter is so lucrative for me, and stock twits and things like that, is because it gives me an open gauge of sentiment, right? I see it. I don't necessarily get to see it, like, as often or as consolidated as I like to. Like, if I want to just go look at oil or grains or gold for the day, like, yeah, I think that definitely would help out. But, you know, there are ways to kind of consolidate it here on Twitter, but they're not exactly, like, ideal. And then you got to sift through a lot of opinion versus fact, which, you know, I've been in it for a while, so I can kind of figure out what's what at this point.
Yeah. You got the experience level to do it. And you know, I'll be honest, I'd love for you and Juicy, and really anyone from this space, as I know people have left, that's their loss. I'd love to show you what we're working on. I would happily hop into our Discord, whatever I needed to, and kind of show you where we're taking this thing. And I always say my big shtick, my selling point is, we're a high utility tool wrapped in a user-friendly package, because I think that's the most important part when you're trying to get things through to people, is making sure that it's user-friendly, right? And the data that we sometimes have to harvest is not always user-friendly. So that's why I love guys like Chris and Juicy, where they can look at something that, to a new person, you're literally having to hop over to a dictionary mid-article to understand some of the things that are being thrown around. So again, utilize your sources, utilize your people, build your system, build your foundation, have a well-stocked toolbox for things that are custom fit to you. You don't need everything. You just need the right things for you. So again, Juicy and Chris, I'd love to demo that. If we could set that up, I'd love to show you what it's all about.
Yeah, hit a DM up. We'll make it happen. Something. Yeah.
I know it's hard to do on Spaces. I wish I could just share my screen, but unfortunately, they aren't. That's not a capability here yet. So, but yeah, great spaces. And then are we back at 8, Juicy?
No, that's next week. I got so many things going on next week. So again, I'm planning out all these spaces, so I couldn't do it on the fly for a week on the same week. It'd be hard because like when you do a space, I try to have a topic and try to have presenters that are great at that topic. So if I want to do supply and demand and commodities, Chris is going to be number one, right? You're not going to bring me there for commodities, right? So, but if you're talking about ES, I'm the guy, right? So planning that out is a little bit difficult. So I try to do that for next week. And again, guys, we're running 2 to 3 spaces pretty much every day next week. I got some big names, working with some names like Benzinga. I've got a lot of people coming on this space next week. It's going to be pretty cool. So stay tuned, guys. I'm trying to record them, get them on YouTube. I'm just looking to give back to you guys and get everybody's as much knowledge out there that you can actually use. All right. I don't want you to come into spaces, listen to me talk about nothing. I want you to come into space. I want you to feel informed. And I want you to be like, I got a little bit better. 1% better every day is what's going to get you to where you want to be. Right. And you can just focus on that progression. Just 1% better every day.
One thing I want to say, guys, I do still have, and people operate it for me. I have a free education platform, Bird Law Trading. If you guys want to look that up, or you have any questions about the system that I run, like I'm sure Chris would do the same thing. That's on there. Like I'd be more than happy to help anyone with any kinks that they have and what they're doing. You just got to get at me here on Chatterquant or find me there, and I can direct you towards the right space to go through that, because I don't want anybody losing money because they just can't find that last gear. So if that's a problem you're having, reach out, find somebody who's willing to do that.
All right, that's going to wrap it up for me, guys. We're going to go ahead and shut it down here. I got to go. I got boxing here in a little bit. So I'm about to go get my hands warm, I guess, and I'm going to head up out of here, guys. I appreciate you guys for showing up. I look forward for next week. Next week, we're going to kick it off Sunday with the watch list. Mindset Monday, we got supply and demand webinars. I'm actually bringing out my first ever coaching series where I take a random person from Twitter and I'm like, look, ask me whatever you want about your trading system. How can I help you? And I'm going to do it in front of everybody else. I got so many things going on. It's going to be pretty dope. And if you guys have any questions, just let me know, man.
I love that. That's a great idea.
Got a lot of stuff coming. Like I'm going to shock the shit out of people next week.
Juice, and obviously I'll be there. If you want me there just for me to access something through our platform, you just let me know, or anything you need.
Feel free to request, and actually I'll throw you on there. You can co-host it, and
that'd be great.
You can jump in. We're planning it out, man. We're messages.
Okay, cool. All right, we'll talk to you. All right, Chris, great job, man.
Appreciate you guys. See you on the next one. Thanks for coming, Chris and Chatter. Be easy, everybody.
See ya, Sam. See ya, Financial.
Thanks for tuning into this episode of Juicy Gems. Make sure to subscribe so you don't miss out on any future episodes. Also, visit juicytrades.org and join the trading community for live training videos, trade alters, or start training with the Learn, Grow, Profit Trader training program. That's juicytrades.org.